Welcome, everybody. This is Buck Joffrey with the Wealth Formula podcast. And today I want to start out by reminding you that there is more to this brand than the podcast, right? There is the website, wealthformula.com. We're also on all sorts of, we're on YouTube. In case you've only been listening, you can actually watch me. I'm not much to look at, but you can watch. And also Twitter, Facebook, all the usual suspects. All you have to do is search for Wealth Formula, and you can get into a little bit of the more in-depth with the brand if you like it. By the way, if you go to wealthformula.com, you can still get a copy of my best-selling book, 7 Secrets of Eternal Wealth. You can download that as a PDF, or you can simply text me at 44222 and type Wealth Formula, one word. Don't let the autocorrect screw you up there. 44222 Wealth Formula, and you can get a copy of 7 Secrets of Eternal Wealth. Now, also, I want to remind you that if you really want to get involved with what we're doing here at Wealth Formula, there's an entire course, a forum, a community, bi-weekly mastermind calls, all that stuff. And if you're interested in checking it out, go to wealthformularoadmap.com, become part of the Wealth Formula Network, which comes with an amazing course to try to put everybody on the same page, which includes the likes of Tom Wheelwright, Real Estate Guys, Kevin Day, Dean Graziosi, Christian Allen. There's a bunch of guys on there. Anyway, they are all phenomenal, and it's all meant to give you a roadmap to real wealth. Check it out at wealthformularoadmap.com. And as one last thing I should mention is, don't forget you can also leave comments and questions on SpeakPipe at wealthformula.com. That's also a very useful tool for you to get in touch with me. Don't, by the way, leave me messages to call you back on there, because that's usually not what it's for. It's actually for you to make comments and that sort of thing on that I can play on the show. For example, for the next Ask Buck show, if you're interested, for example, in investing and getting involved with Investor Club and things like that, then just join Investor Club at wealthformula.com. Anyway, so that's that. Now let's talk a little bit about today's topic. You probably know that I'm a physician, right? I mean, that's part of my brand. I'm an ex-physician. So if you're a highly trained, high-paid professional, I've lived that life, been there, done that. In fact, I'm a surgeon. I've had training in all sorts of stuff. I kind of bounced around because I couldn't make up my mind, like everything else in my life, except for my wife, fortunately, which I think that makes everything much better when you can decide on that one and not move around much. But the career pathway, I moved around. I transferred colleges because one wasn't a good fit, and then I went to med school, and then I started out in neurosurgery. Yes, indeed, I did the brain surgery thing, and I did a couple years of that, and then moved on, had neck surgery outside of the brain, because the brain seemed to always have emergencies. They were inconvenient and not good for my lifestyle, so I had to get out of that. Then I did some cosmetics training, et cetera, et cetera. But, in terms of looking back, what I found the most interesting intellectually, this is probably not going to be a big surprise to you, was the brain and neurosurgery. And that was back in the days when I was a hardcore academic guy. And one thing that I learned during that period of time was about something called the prefrontal cortex, right? And like it sounds, it's just behind your forehead and right behind the frontal sinuses there. And it is, I think the best way to describe it is the CEO of the brain. It's involved with personality, with decision-making, moderating social behavior, which includes, of course, impulse control and risk-taking. You may not, therefore, be surprised to learn that this structure matures in life. That's why teenagers are so reckless frequently, because they have an immature prefrontal cortex. In fact, one study found that the prefrontal cortex may actually continue maturing into your 40s, and that doesn't surprise me. And again, the brain of the teenager is typically poorly developed, and that's reflected in the behaviors that you might have experienced yourself back in the day. Now, I look back and think about some of the things I did back then. I wonder how I made it alive. But back then you can do a lot. When you have the physical strength and agility and everything's young, you can handle a lot more than when you're an older person. Not that I feel like I'm really old, but I'm 44. I'm not 24 anymore. But it's funny when you think about it, right? It's curious, in fact, to me, why it takes so long for this part of the brain to develop. Why would it take that long? After all, it's where all the wisdom resides. And wouldn't it be great? Wouldn't it be great if we had the wisdom that we have in our 40s back when we're in our teens and 20s, early 20s? Wouldn't that be great? I was not one of those. I know there are some people who have significant, early maturity in that area, but that was not me. Part of me thinks that the reason for this, that the prefrontal cortex development into our late 30s and early 40s is designed ultimately from an evolutionary standpoint to compensate for our relative physical decline. What do I mean by that? Well, in other words, we find other ways to be useful to society, to be useful to the tribe, since we can't hunt or even reproduce maybe the same way we used to. No offense. It's not like I have a problem with anything like that. But anyway, the tribal elders back then in the day, they were considered, to be the one with wisdom. And understand that the idea of people living into their 80s and stuff like that, this is a modern phenomenon, right? The turn of the last century, we were talking about a global average lifespan of 30 years or less. And so, to make it to those, those wisdom years into your late 30s and 40s, well, that was when you got your wisdom. That's when you had your prefrontal cortex well developed. And in that regard, and maybe for that reason, it gave the rest of the tribe a reason to keep you around rather than just pushing you off a cliff because you weren't really helpful to society anymore. Whatever the evolutionary purpose for this late development of wisdom in our lives, I can say with some certainty that I actually personally have felt this palpable change in my own life. And the irony of it is that it happened after I was a neurosurgery person. Before actually, I saw the prefrontal cortex with my own eyes in a living human being before my own seemed to develop. Anyway, I have become wiser in the last 10 years, for sure. I actually feel smarter today at 44 than I ever have in my life. And to be clear, I'm not sure if I could study with the same intensity now that I did 20 years ago in medical school. And, I'm not sure if my recall would be quite as acute. I don't know if that's the case. It might be. I don't know. It just might be that I'm lazy now, or I'm too smart to think that I would ever sit down for that much time and that it was worth it. But when I say I'm smarter, what I mean by that, in very broad terms, is that now at 44, I see the world with far more clarity than I did when I was 24. I'm a very different person. So for me, the most profound change in my thinking has been the recognition of traditional paradigms and of conventional wisdom. I've talked about this maybe ad nauseum on this show, but it's a really important point. It used to be the case that I never really questioned anything. It never occurred to me to do so. It wasn't because, I just believed everybody because they were right. I just, I didn't even think about them being wrong, right? these days, I like to examine my own belief systems in all aspects of my life. And frankly, I'm not afraid to challenge them anymore. And it's actually very, very liberating. You know, it does take some courage to do this. And for those of you who have gone down this path, you know this, our belief systems are shaped throughout our life. And they're so deeply ingrained. They're so deeply ingrained in us that sometimes that when we start doubting, like we become doubters, we become, it's almost like you're doing something wrong, or you're violating a religion or something, and you're sinning. It feels like we're doing something wrong. Of course, belief systems permeate all facets of our life, not just religion. And this Wealth Formula show is all about wealth. So let me use a relevant example in the investing world. And this probably comes as will ring a bell, so to speak. This is not something that you haven't seen before, because I talk to accredited investors almost every day, and I often hear them talk about, conservative investing. I'm generally a conservative investor, so I don't want to go crazy here. That's what they'll say. What does conservative investing mean? That's what I got to ask, right? That's really where you have to start saying, hey, my prefrontal cortex is asking the question, what is conservative? Because I wouldn't have asked that when I was 24. Well, conventional wisdom has drilled it into us that conservative investing is basically to maximize your 401k or IRA and let a wealth advisor put you in a portfolio of mutual funds. Now, I know you're smarter than that, otherwise you wouldn't be listening to this show. But that idea still may resonate with you a little bit, because it sounds like the safe thing to do. That is, after all, what we were taught is the conservative thing to do. That's been drilled into you for so long. But ask yourself the question, why is it conservative? Why is my brain keep thinking of that as like sort of the baseline, the place where you're safe, the safe harbor? Mutual funds have yielded an average of about 3% yield over the past 3 decades. What does that mean? Well, with inflation moving at around 2%, well, that gives you about a 1% real growth in your money every year. You see, there's something called the rule of 72, and you take 72 and divide it by the percentage yield on a yearly basis of your money. So 72 divided by 1% is 72 years. It would take you 72 years to double your money. What makes that conservative? Can you tell me that? I mean, seriously. Of course, you could also just keep your money in the bank, and that's conservative too, right? I mean, people say that's a conservative thing, to save your money and maybe put it in something that yields less than 1%. Is that conservative? Why is that conservative? Why is that safe? With inflation, you would guarantee that you would lose money over time. Is that safe? No. Is that conservative? No, that's a guarantee to lose money over time. Meanwhile, Wall Street has labeled real estate and other tangible investments as alternative. I'm putting my fingers up in quotes here. Alternative. Now, what comes to your mind when you think of that word, alternative, right? What conjures up in your mind? Blue hair? Pierced body parts, maybe? Indeed, the language is there for a purpose. It's there to guide your thinking. After all, owning real estate and other tangible assets is what the richest families in the world have been doing for centuries, far before there was ever an equity market, like the New York Stock Exchange, for example. So why are we supposed to be scared of it? Why do wealth advisors in your own family, I know I've heard this from many of you, why do they tell you that you are doing something wrong when you are talking about investing in anything outside of Wall Street? They do it because they can, because it has become conventional wisdom. The problem is, and this is the key thing, this is the key takeaway, where your prefrontal cortex has to come in and say, no, this is not true. This is a paradigm, but all paradigms are not true. I'm a village elder. I'm a tribal leader. I can tell you now that this doesn't make any sense after all, right? And why? Why then do they tell you that? Well, it's because conventional wisdom, in fact, is often wrong. Paradigms are often wrong. Not only that, but paradigms and conventional wisdom can often be and often are created by Wall Street, special interest groups like Wall Street. Just, you don't believe me. I mean, listen, you got this whole thing. I've talked about it before, but there's this whole, thing back when we were growing up, back in the 80s, 90s, probably even, I don't know. But I remember seeing the food pyramid on the food pyramid poster in class, and everybody thought that it was the way you're supposed to eat. Remember what the food pyramid looked like? You're supposed to jam pack your diet with carbohydrates. And as it turned out, that's what we thought was right? That was the right thing to do. And as it turned out, that was that whole thing came out of a Harvard study that was done in the 50s that was funded by the sugar industry, that basically told people that sugar did not have anything to do with cardiac disease, and we know that that's wrong now. So again, the idea here is that conventional wisdom is not always right, and it can be influenced by special interests. There's so many times this has happened in history. You have to start believing that. Now, this is the perfect topic for my guest today, David Phelps. David, like me, started out in the health profession. David was a dentist, and he discovered this paradigm and this conventional wisdom be wrong at a pretty young age too. And he's done a very good job over the last several decades in educating people on other ways to look at the world. So when we come back, David Phelps. Welcome back to the show, everyone. Today, my guest is Dr. David Phelps, DDS. Now, a lot of you already know David because you are in his group, or maybe you're a dentist who's heard of him. He's been around for a long time. He was actually, I would say that he's been Buck Joffrey much longer than Buck Joffrey has been Buck Joffrey. He's a nationally recognized speaker on creating freedom, building real business, and investing in real estate. He also combines his professional and personal experiences to illustrate how the tactical and aspirational work together. David works with health professionals, logical, rational professionals, and helps them to become dreamers and then strategically manifest those dreams into freedom. He authors a monthly newsletter, which is A Path to Freedom, and hosts the Dentist Freedom Blueprint podcast. He also has his Freedom Founders Mastermind community, of which I know a number of you are part of, which is growing exponentially year by year. David, it's a real thrill to have you on the show. Thanks for coming on.
Buck, love being here. Thank you very much for having me.
So tell us how it all began, David. I mean, this is, obviously you started out as a dentist. You had your own practice, I know, and this started a while back, and then you kind of pivoted into the world of real estate. So give us a little background on that.
Yeah, it's actually the other way around, Buck, and I'll tell you that not unlike you at all, and probably a lot of people that are listening to this podcast, my entrepreneurial spirits were within me from a very early age. My parents were very good parents. They didn't spoil us as kids. If we wanted something in life, something tangible like a new bike, or back then just having my own little, not a color, but a black and white TV in my room, I had to go out and figure out a way to buy that. I wasn't given an allowance. And parents wouldn't just go buy it. So I learned early, how to make money. And I sold greeting cards from door to door, mowed lawns, through the newspaper, did whatever it took to make some money so I could, buy things that I thought were important to me in life. My father was a physician, so there was a natural path that I was going to go down because, well, not that they forced me to do that, but it's just, I was around that world. I saw my dad was respected in the community. Yes, he was able to provide a good lifestyle, but I made a little diversion to dentistry because I became kind of a mentee of my orthodontist when I was in junior high, late junior high, high school. I had this orthodontist who really took a kind of a little affinity to me. I think, and I saw him as someone who again had all the things that I thought were what I wanted in life, but he also got to go home at the end of the day. I saw my dad, who didn't always go home at the end of the day. You're a surgeon, you know what I'm talking about. You don't just get to set your own hours. So I thought, okay, I'll go down the dental path. But here's the thing. When I was in college, Buck, I was reading books about how to invest money. Now I didn't have any money to invest. I had debt. I should have been reading books about how to retire debt. But now I decided I want to learn how to invest money that I didn't have. But I read books on the stock market, right? Books about mutual funds and all that stuff. And I read got a few books about real estate. And I realized back in those days, Buck, and my notes to a lot of you on this podcast today, there was no internet. All right. There was no Facebook. There was no forums. There was none of that stuff. I actually had to go to the library. I couldn't even order off of Amazon. I had to go to a library and present a card. But there were actually books about real estate back then. This is the late 70s. So I read those books between real estate and the stock market, and stock market just made no sense. I mean, I couldn't figure out how I could actually exert any kind of control. And I'm kind of a control freak in life. I want to understand what I'm doing. I want to be able to call some shots, and whether they're good or bad, I want to feel like, I had a play in it, and real estate made sense. So I graduated college, went to dental school. My first year entering dental school, I said, hey, Dad, I'm going to be here for 4 years. I can either pay rent, or we could, and the key word here was we can own an asset called real estate.
Yeah.
He never invested in real estate. Unlike your father, who was very much involved in real estate, my dad was a physician. He was about as entrepreneurial as you get, having your own clinic, right? And so he trusted me, and he said, okay. I came down to Dallas. We spent a couple weekends looking around, and the key thing I knew about real estate, really the fundamental thing I knew was, buy the worst property in the best location, and we did. Fast forward 4 years, I was the manager of the property. He was a financier, the capital investor. I had 2 tenants during 4 years. Not too bad for a first time out of the gate, right? First tenants were not so good. I got some SMU students that weren't the best tenants, but fortunately I got their parents to co-sign, so damage they did was taken care of. Next tenant was, I got a family, much smarter move. But here's the thing, Buck. I waited tables all through college and dental school, and actually a pretty good restaurant. Flexible hours, made some pretty good money. Probably made about $20 an hour. Not bad for back in the 80s, right?
Yeah.
Then I took the hours that I spent or invested on this capital asset, this real estate joint venture rental property that I bought with my dad's help, and I made, if I took all those hours and what I made on the back end, which is we split the capital gain profit. We made about $50,000 in 4 years, capital gain. So I took my $25,000 and recalculated and put the hours I put into that. I made about $260 per hour, a little bit more of a 10 times multiple over what I did back then, trading time for dollars in a restaurant. And I thought, that was my epiphany. I thought, okay, yeah, I'm going to go on and become a dentist, and I'm going to do that well. And that'll structure my basic lifestyle. But this capital asset, I didn't even know what a capital asset was back then. I just call it rental property. That's what it was. This rental property thing that worked out a little bit by luck, but more than times than not, it was the opportunity was there. We didn't make any big mistakes, and it produced more income for me with less work. And I thought, there's something to this.
Yeah. Well, let's talk a little bit about, you talk about something called the gap, and specifically, I've heard you say that, dental schools fail to reach, what they failed to teach you and how you can overcome it. But really, I think you're talking about money there. And I think it's really not just dentists. It's certainly physicians. And I think pretty much all professionals seem to have this problem. It's just, it just seems like the closer you are in the position where you're a doctor, doctors are the worst. Dentists are at least a little bit better. but it seems like there's there is that element of it. But there, to the extent that all professionals who are hyper focused on what it is, the skill or the art that they're learning, they don't really get taught anything about money, right? Is that what
Right.
you mean by the gap?
Well, yeah, that's one of the gaps we talk about. So certainly there's a gap in financial acumen. As you said, the whole premise when we go through all these years of education to become experts in a specific skill set, surgery, diagnostics, treatment, that's honored. That's very reputable, and certainly in doing those things, we do change lives, and that's very satisfying. Yes, the problem is, Buck, there's no leverage in that. You can certainly improve yourself. You can become a better surgeon, a better dentist, a better clinician. You can be more efficient in what you do. You can actually do larger cases, large rehabilitation cases, and essentially make more money per hour spent. But there's a cap on that. You can't explode that past a certain point. And we don't recognize that when we're in school and thinking about becoming who we eventually become in our lives. We don't really recognize that churning that hard in trading time for dollars really doesn't lead to freedom, because the big problem is as we start to earn more money, our lifestyle typically goes up with it at the same time. In fact, sometimes even faster.
Yeah.
Well, why is that? Because we feel like we've sacrificed all these years when some of our buddies out of college have gone on and they're in business and they're on Wall Street or whatever. They're living life and we're going, man, I got to catch up with that. I deserve it. And we got families, we got spouses who will probably put up with our stuff and all those lean years. And they're saying, yeah, come on. Let's move to the better neighborhood and let's amp it up. And that's when it starts to fall apart, because once you get on that hamster wheel, it's really hard to dial it back.
It's what I call the golden handcuffs.
Yes.
Right. Keeping up with the Joneses or the working rich.
Yep, exactly.
Keep working to keep up your lifestyle. Now, you also talk about the accumulation theory of Wall Street, and that's going to leave 96% of people unable to retire. Talk a little bit about what you mean with the accumulation theory, and what's a better way of doing it.
Yeah, what traditional, conventional financial planning, we hear it, we read it. You can read it in Kiplinger and Money Magazine, and certainly the financial houses, the Fidelities and Vanguards and Schwabs, and anybody you talk to will talk about, early in life, it's very important you start to save money. And I agree. I mean, we need to be disciplined. We need to be able to, take a certain amount of money off the table and put it somewhere. Well, they talk about saving, so accumulating. And then, of course, Wall Street wants you to hand it over to somebody there to put it into financial products, which they, claim will grow and someday will have this oak tree that you can start picking the fruit off of. But this whole accumulation game, I think, is wrong, Buck, because what does it teach anybody? Discipline, yes. But beyond discipline, if you can have that discipline, does it teach anybody how to actually orchestrate the real lifeblood of having freedom? And that's cash flow. Just having an accumulated stack of money or capital that you cannot actually see how to sustain cash flow, what good does it do you? And that's why so many of our colleagues, as hard as they work, and even if they do stack up $1 million, $1.5 million, $2 million, which you and I would say is a decent amount of money, but the fear there is a real fear. It's like, okay, I want to retire, I want to slow down, I want to leave the practice and live off of what I've accumulated, but I'm scared to death because, well, where's it been? In the financial, in Wall Street. Let's see what happened 10 years ago. Yeah, it blew out, and I could ride through that because I was still working. Well, if I quit now and I don't have any active income anymore, and if we have another blowout, where am I? I got to go back to work. They haven't ever figured out how to orchestrate cash flow. That's why you and I love tangible assets, real businesses, or real estate, anything that you can actually have some level of control over. It's not perfect, but you can exert control and therefore have predictability. And tangible assets also will greatly mimic, inflation, which I think we're probably going to see some heavy inflation in years to come. That's another fear factor that people who are getting ready to quote retire have, is like, well, I've accumulated this much. Is it going to last? And the cost of living, I don't think it's going to go down. It's going to just go up and up. Taxes are going to go up. So you have all these factors working against us. If you've never learned how to overcome those through your investing, then you're in a position where you have so many unknowns that you just can't let go.
I think one of the things that you mentioned is part of this accumulation theory, and I think part of what the trap is for professionals is that there are so many of these prefabricated retirement plans. You have these, are you going to a job and all of a sudden they say, well, we're going to give you a 401k. What does that mean to most people? What it really means is, okay, so then I don't have to pay any attention to
Yeah.
retirement
Yeah.
because it's going to go on autopilot. But most of these 401ks end up ultimately being invested into a basket of mutual funds. And as you know, for the last 3 decades, the average yield on a mutual fund, despite what the market has done, has been between 3 and 3.5%. And if inflation's going at two plus, you're not, you're doubling your money of about every 72 years, which is just not enough.
No.
But I think that's a real trap because, like you said, I am looking at people. I talk to people frequently who've been making a lot of money throughout their life, and then they've been spending a lot. They're buying stuff, living a good life, and it's not because they thought they were being irresponsible. They just thought the system was going to take care of them, and then all of a sudden they're 60 in their 60s and maybe they've gone through a divorce or something like that. And they're like, holy cow, I was making mid 6 figures for, 2-3 decades. And I've only got this amount to live on. If I were to retire, how am I going to outlive this pile? Do you see that often?
I see it a lot, Buck, unfortunately. And there's little you can do to help someone in that position. I say kind of the mean age that I get, calls from or communication with would be dentists who are about 59 years old. So right at that point where they're going to turn 60 and they're still in practice. And oftentimes they've gone through a divorce, sometimes multiple. So that's, I always say that's not a wealth building.
That's right. That's right.
Just it's, I don't mean to tangent off here, but a lot of times people get all worked up about asset protection, right? I gotta protect my assets. I go, one of the big ones is don't get divorced.
Yeah. Well, no.
You can save yourself a lot of time and trouble if you just follow that one rule. Is figure that one out. I'm being a little bit facetious because I unfortunately have been through a divorce, so I can laugh a little bit at the same time, but it is a serious thing. But back to your premise, is that they've worked all their life. They've literally had millions of dollars flow through their practices, millions, and what they had to show for it. Oftentimes still a fair amount of debt, business debt, practice debt, consumer debt. They still think it's on them to put 3-4 kids through graduate school, which is another discussion for another day, but they've loaded themselves up. They never had a plan. They thought, as you said, the system or just putting it, on Wall Street in the 401k, the traditional plan was going to do it. And it doesn't because they were never intentionally in the game. They kind of abdicated it. And I get it. They're busy. We're all busy, right? But getting to freedom, which is the key. We can build up a lot of money, but we can't buy time back. Time is everything in life. And if you don't have that time, then you really have nothing at all. And so I encourage people as busy as they are, as hard as they work, as many plates as they have to spin, in their lives. I get it. But you've got to be intentional about building this wealth and doing it the right way from the get-go, because that's what's going to give you something that you can have a plan B. You can let go of your active practice at some point if you want to or if you have to, and you're not stuck, looking at backward in your life and going, well, what happened?
You talk about creating a freedom blueprint. Now, let's take that example of somebody who comes into you at 59 and a half.
Well,
and says, I've got this practice, I'm clearing like, $300,000 a year of net income, but I've only got about 1.2 million here and I've stashed it away. It's been quote unquote growing in mutual funds during this period of time. And I haven't done anything else because I figured that was going to take care of it. David, all of a sudden I'm looking at this and I'm saying, this is not going to be enough for me to retire on in 5 years like I had planned.
Yeah.
Obviously everybody's situation is different, but where do you start in a situation like that?
Yeah. Well, first and foremost, Buck, assuming we've got, a married couple,
yeah.
that assumption, you've got to make sure that both are on board, and that's not always going to be right off the get go. I mean, there's and I'm not a marriage counselor, and I'm not a financial advisor either one. I'm I'm an educator, so but I can be very practical and say, number one, you can't go have a blame game, because what happens so often in life is that two people are on two different pathways, and many times and not being chauvinistic here, but let's say that the doctor, being the male, being out there the breadwinner or heavy breadwinner, doing the heavy load, has all these mishaps in failure to plan or be a good manager of the money. It happens, and he has to stuff all that inside. So he has these sleepless nights as the kids are growing older, and the spouse and the kids think all is good because you get to go to Disneyland every year. So it all seems like it's good. You're driving the cars, you're living the lifestyle, but inside he's feeling like he knows inside it's not working. But so you've got to get that out, because as long as there's some mystery in the communication, next thing is, you have to just account for what you've got. What are your assets? Your practice, your business. How healthy is that? How healthy are you? How are you? What can you leverage or better optimize in that practice? Because yes, to maintain a certain lifestyle and have enough to let go, you're going to probably have to work a few more years. Now, to figure out what that looks like, you have to say, well, what's your lifestyle burn rate? What's that look like? If you're done with active practice, you've paid off all your debt, and this is what you have, where does that need to be deployed to get you what you want? And the faster you want to get there, or the shorter the time frame that you want to close that gap, the more potential risk / leverage one has to use. Again, being very careful in the current market. We both know that we're at the tipping point in the market. We probably had some softening. So do you go out and heavily leverage like we would have 3 or 4 years ago? Not the same way. But you and I both know to build anything up and to do it more quickly, some amount of leverage has to be used. So yeah, you're right. There's no one answer for each person. You've got to balance all these different factors in play and get them on the same page, and then just get real about it. Sometimes it means for the next few years, maybe you do cut the lifestyle. Maybe you make your kids go out and actually be resourceful and pay for some of their own education. Maybe there's some things you can, again, you've got to be on the same page. 59 and not having a game plan out, that's the tough one. I'd much rather be working with a younger person who has got some years to work the blueprint, and it's an easier pathway if you start early.
Right. So you say take the chance, go from overthinking to dreaming to freedom. Talk about that.
Yeah. Well, and it's a lot of what you talk about too. The way we're brought up to be conservative. We're health practitioners. We're healers. We have to be conservative because we're dealing with people. But we've got to take that hat off, and I think you've got to have a bigger vision for what you want your life to be. So you got to take the hat off of being conservative and precise and measure everything 3 times before you cut anything on the human body. Absolutely. But for your life, you got to take that hat off. You've got to blow up a bigger vision. You got to have an accurate vision of what you want your life to be. And you can't just look out, to age 60 or 65 and go, yeah, when I get there, then I'll do this. No. You've got to have milestones much sooner. Yeah, sacrifice early, but give yourself rewards early. Have a plan to pay off debt. And there's you and I both know there's ways to pay off certain debt. Some debt you don't want to ever pay off. You just want to let it run the course and amortize out. Other debt you want to pay off. How do you pay off debt? How do you build and leverage into your business, your practice? How do you take the money, the funds you pull off of the business, the practice? How do you deploy that? Those things have to be put into play very intentionally. You cannot advocate that responsibility like too many of our colleagues do, because that's what Wall Street says. Hey, no problem. Just give us your money. We'll set your 401k. We got it all planned for you. Just sit back and work like a dog. And when you get there someday, we'll be there for you. Well, are they? No. I mean, did they ever come back and say, gee, sorry, it didn't work out? No, they're gone. You've got another generation of Wall Street people back in there to take over and to try to give you a different outcome. This doesn't work.
Yeah, and one of the things that you said there, you're talking about people in the healthcare professionals, in particular, and surgeons or dentists or whatever. And really, it's it's a lot of really pretty much any high-paid professional or generally something highly educated. They are afraid to take some risks, think outside of the box because they are quote unquote conservative. One of the things that I think is important is to define exactly where that notion of conservative came from in the first place, right? Like, what is conservative? Um, you know, I have this, my brother is just a, he's a big time banker, and he was managing the sovereign wealth fund in the Middle East for one of the countries over there. And he got lured away by an entrepreneurial company in Dubai who said they wanted his help to take them public. Well, they came over, plans changed. He came over, plans changed, and told him that they didn't need him anymore after about 3 or 4 months on the job. Now he's doing fine. He's made plenty of money. But the point here is my mom always thinks he's the conservative one, right? Why? Because he's always working for someone and making a salary. He's a salary, like a high salary, right? But who's the conservative? I mean, what's really conservative in this scenario? To me, I'm the conservative one. No one can ever fire me. No one can ever fire me. No one can tell me, like I don't have to all of a sudden wake up one day and say, what I thought was reality is no longer reality. And that's one of the, I think, paradigm shifts that a lot of people have to make. The same thing goes for mutual funds. Why are we thinking that Wall Street is quote unquote conservative, right? Why do you think that is? Why do we think that it's conservative? Why do we call it conservative?
It's what I call groupthink. It's majority thinking. It's what we've been indoctrinated into thinking. It comes from us from so many different media channels.
Right.
It's how we're brought up, right? And so if quote everybody else is doing it. In fact, back in dental school years and years ago, I remember the school trying to help us with financial planning brought a financial planning guy into the school. Well, is he going to talk about orchestrating your own future or investing in tangible assets like real estate? Heck no. He comes in talking about the traditional stuff. So from very early on, this is what we're taught. So anytime that we are presented with something that's different than what we've been brought up to think, then that becomes not conservative. That becomes aggressive. That becomes scary. That becomes risky. And so I think that's what it is, Buck. You're exactly right. It's just gotta shift the way people think. It's no more than that. It's just how we're brought up.
That's right. And then you got to just think about it critically and challenge your own paradigms. To me, working for somebody else is risky.
So. It is. Yeah. Cause you have absolutely no control. I mean, I was early on in my career, when I first got out of school, in dental school, I did work for somebody else. I was an associate. I didn't have any financial investment. That was probably a good thing for me to do because there's so many things I didn't know. Right. So I learned a lot, and I had, the basis of a business that I could actually make money without all the risk of all the other financial machinations go along with operating a business. But within a relatively short time, a little bit of chutzpah, right? I could do this better, famous last words. No, I mean, but that's a good thing. That's a good thing. So at some point you say, yeah, this is not what I want. I'm not content working for somebody else because most of us that are entrepreneurs and are, driven, A-type personalities, we want some control. We want to have the opportunity to take the challenge, to live a life, to create, to do things bigger, better, whatever we define as our vision in our life. We want to do that. We don't want to be under somebody else's thumb. That's what drives us. We need both kinds of people in this world. There's nothing wrong with the other side. It's whoever you are.
Yeah, just to be clear, I'm not suggesting everybody go quit their job. I think the point being that identify what is truly, what you call conservative. And if you're dictating, your behavior on some threshold of risk, just make sure that you've calibrated that correctly, because that's a major issue, I think, for people. And that, is not just about entrepreneurship. That's about what we're discussing here with regard to your investing as well. Risk is, it's really, it just depends whose hands it's in, right? Or whose vision it is, what mindset you're in. Now let me shift a little bit, because you've got this great group that I hear about a lot of times, and it's called Freedom Founders. Tell us a little bit about Freedom Founders.
Well, Freedom Founders is a mastermind community, and I emphasize the word community. It's a little bit like the sitcom back in the 90s, like Cheers, right? So Cheers. Sam Malone and Norm would come in and everybody go, hey, Norm, or hey, Cliff, right? So at Cheers, everybody knows your name. And you and I were talking earlier about finding, the right people to invest with or through, collaboration. Well, that's what Freedom Founders is. It's a community of people that are like-minded, like-spirited, but where the same people with some new people, will come in. And so you get to know the people that I have found to collaborate with that bring, I think, very highly curated investment opportunities, kind of a smorgasbord, all kinds, all different geographies, different asset classes, because I can't provide all that. I wouldn't pretend to. Same thing. It's organic. So the same people come back, and in that community, we beat things up, meaning it's not just about me. I don't, I have biases about certain things, and I'm very clear about them. I talk about, what I like, what I don't like, but that doesn't mean that my way is the only way. I like to have other smart people that are also part of the group, trusted advisors, board of advisors, who also aren't there with an agenda in mind. They're there because they also like to learn and be a part of a community where we can put our ideas out there, or our challenges, our concerns, or what do you think about investing in this in the marketplace today? Well, you're going to hear different points of view, right? Because everybody has different perspective. You get to be in a room like that where you feel like people aren't there just to sell you into something, but actually have perspective and experience. You get to actually start again formulating your own path, and that's what it should be. None of us should ever follow one person. You're well read, Buck. You've studied, and I'll bet you're the same way. There's some people that you find more of an affinity for, right? And you go, well, I like that person because, number one, I think they're right because they have the same beliefs, and also they have a lifestyle and some core values that I also can see. I like that. There may be somebody else on the other side who, again, is very wise and smart, but there may be some parts of their life or other beliefs that you go, I'm not totally bought in. I'll pick and choose. I'll take the pieces that are relevant. And that's why I like a community. It's not one person saying, hey, I know how to do this. This is the way you do it, because there's more than one way to do anything. So Freedom Founders is something it's become kind of the joy of my life. It's a passion because I love to be around other people. I like to help other people, and through it I get to have a platform that I get to invest my money as well. So I do as I tell the doctors do. This is how I do it today. I don't go out and find my own deals. I don't go out and knock on doors the way I did when I was younger, right? This is the way I do it. So I walk the talk, and it's a lot of fun.
The model is somewhat similar to my accredited investor group, except I think yours is like sort of more in person and that sort of thing. One of the things that you do in your group, from what I understand, which we don't do in Investor Club, is I've talked to people in your group who've found tremendous value in helping with their practice. So if they're trying to, if they're a dentist, I've talked to a few dentists who've really found tremendous value in what you've been able to do. Tell us about some of the things that you've been able to do with practice. Like what are they? I've never really gotten into the weeds with these people, but that's one of the things I hear is a recurring theme from your colleagues.
Yeah, and Freedom Founders didn't start that way. My first vision of Freedom Founders is we're not going to do anything about practice, or it's all about investing, and particularly through real estate. That's where my initial focus was. But it didn't take long to see, Buck, that as doctors came, they all drag this thing called a practice along with them. They didn't drag it with them. Again, that's the engine. That's the engine. So I'm not a practice management guy. I mean, I can talk about practice management. I've been there. I've been in the trenches. I've been through mergers and sale and associates and partnerships. I've been, I can talk about it. It's not my passion. So I realized that I couldn't just ignore this ball and chain called a practice that could be optimized so they could get their money invested. So rather than me do it, just like the real estate, because I'm well networked, I brought in not just one or two, but so people have a choice. But I bring in good people that I know have a great track record in helping with all aspects of practice. And a lot of it again comes back down to mindset. It comes down to leadership. It comes down to building a culture. All the technology. All that stuff that dentists particularly like. We love our toys. We love our toys, right? We like to buy all this cool stuff. But having a business is so many different pieces, and I have a real appreciation for a business because with Freedom Founders, I mean, I have a great team. I have a better team with Freedom Founders than I ever had in my practice. I wish I knew back then what I know today. I would have had a better practice, right? But you only know what you know. So yeah, we definitely help them with their practice, but it's through other people. I talk about it. I try to lay the vision for what they need to focus on, but then I help plug them into good people who I know have have the, or value people. And if they decide to work with them, then that's their deal. But we have a lot of accountability. I only bring in good people, and they have accountability to our people, not to give guarantees. There's no guarantees in life, but to provide, the value, provide the services. Now, then it's up to the individual who wants that help to take the action. That's the part that they're responsible for, right? Whether it's in their practice or whether investing money, you've got to take responsibility to step up and, follow a plan or do due diligence, the things that we teach.
Right. So David, you've got the Dentist Freedom Blueprint podcast. You've got the newsletter. You've got Freedom Founders Mastermind community. Where can we go to learn more about this?
Yeah, probably the last two places. freedomfounders.com is the main website for the community. And then the Dentist Freedom Blueprint podcast, which you can get off of iTunes, Stitcher, out there with all the podcasts. So those are two good places, I think, for people to engage and, learn more about what we do and, get to hear from great people like you as well. Cause I love exposing people to great people and great ideas.
David, thanks so much for being on Wealth Formula Podcast today.
It's been a pleasure, Buck. Thank you.
We'll be right back. Welcome back to the show, everyone. Hopefully you enjoyed that. And certainly if you are in the dental world, check out David's stuff. We've got a few people in the group who either are currently part of David's mastermind or have been in the past. And they have found value. I think, David runs a very interesting shop out there. And I think a lot of people get a lot of benefit out of it. I also, let me just do a few things here, just a little bit of housekeeping. First of all, we have our own mastermind and it's pretty cheap, frankly. So go check that out at wealthformularoadmap.com. And it comes with a course. There's this whole, robust course with all these big names to help you get you caught up. And then there is a forum. There's a Facebook group now, a private Facebook group. There is biweekly mastermind calls. Last week, we actually had Kevin Day as a special guest on it. The week before that, we had Christian Allen. So it is a very useful group. I think people are getting a ton of value at it. So if you're interested in really taking it to the next level with the Wealth Formula brand, then that would be the place to do it. It's a lot of fun, and I enjoy having everybody on there. Again, also remind you to leave your questions and comments on SpeakPipe at wealthformula.com. We'd love to have you on a future show in the Ask Buck episodes. And that's it for me this week. This is Buck Joffrey with Wealth Formula Podcast signing off.